Welcome back, and joining us on the show now is Rishi Nathani. He is Chief Business Officer at MCX. Rishi, hi, thank you for joining and congratulations. Yet another product launch that happens today, and this is options on Bullion Index. What is the kind of participation moves that we've seen into this one? And this year clearly has worked out very well for MCX. More products being launched, records in sense of volumes as well. What does it new product that do for you?
Thanks, Manisha. This is, I feel, is a missing piece which we had in terms of binding both gold and silver together. So today you have a contract in the form of our Buldex options, which have 60% gold and 40% silver, and it allows someone to take an exposure to both gold and silver in one shot. So it's early days yet, but we are seeing a pickup in participation, and I hope to see a lot more participation. And this is the first index product we've launched in the commodity derivatives markets, and I hope that this product will do well and pave the path for many more products to come.
Oh, absolutely. Rishi, also, what is the kind of participation do you see into this one? Because one, as you mentioned, it's a risk management tool, and two, this is cash settled. So would you see a different approach onto this one?
Yes, because today, if you see that there are various reasons why this contract is more suited for someone who wants to do an absolute price hedge. Because one, the underlying of this contract is the 1 kg gold contract and the 30 kg silver contract, whereby the notional of both would be almost 1.75 crores, whereas you're getting this contract at 8.5-9 lakhs. Secondly, this product is a basket of both gold and silver, so it makes it more simple. Thirdly, there is no devolvement of these options into futures since they are cash settled. So anyone can hold their positions right up to expiry and get in case they are in the money and they bought the option, then they can get the differential paid directly to them without having to worry about delivery. So a lot of benefits here. So anyone who's looking for an absolute price hedge, whether it's a hedger, an investor, or an institutional participant, I would say this is for those people.
Rishi, talk to us also about the kind of volumes that MCX has done this year. We've seen various numbers continue to grow as much as we peaked in the last time there was a run-up like that. Where is this majorly coming in from, and how would you look at metals and, as you said, options perhaps on other things could be coming in as well? So is energy next or is base metals next?
So, as you know, we already have two more indices. We have apart from the bullion index, we have a metal index and an energy index. Now, depending on the success of this contract and as well as the requirements for the market, we will look into those contracts. And as and when we get approvals, we may look, if we at all decide to go for those contracts, then we may look to launch. Nothing sure as yet. However, having said that, volumes are picking up and participation is picking up, and we are seeing an all-round participation from every participant base. So whether it be the institutional participants, which is also ticking up, or the hedgers, because given this kind of massive global volatility, the need for hedging increases humongously. And of course, there is a lot of investor participation. It's because gold and silver, as we all know, Indians are, it's in our DNA. So there is a lot of participation from investors as well.
Oh, I can bet on that. Yes, gold and silver is part of our DNA in some sense. Rishi, would be interesting to know on what are the kind of deliveries that the exchange is looking at across various segments, especially gold and silver.
So we've been seeing robust deliveries across all our products and across all the segments. While I don't have the absolute numbers for you right now, whether it be our base metals or our bullion contracts or the agri contracts, wherever we have deliverable contracts, we've been seeing decent deliveries. Having said that, I would just like to mention that the exchanges are a platform for price discovery and price risk management. Delivery is just a secondary part, just to ensure that prices are anchored to the reality of the markets.
Point taken. Rishi, 2025 has, as I said, has given you more products, more volumes as well overall the exchange. Any more new products that you're looking at that you can share with us that are in the pipeline yet?
Yeah, we always have a healthy pipeline, and I told you this some time back also that we will bring a lot of products for you, and we in the last few months, you've seen 4 products being launched, and this is the 5th today, and hopefully we'll see many more to go going forward.
Rishi, the way we've seen, risk management happen on the exchange side as well. We've been looking at margins being increased, not just on MCX. We saw that on CME as well, with the way gold and silver have been very, very volatile. Going ahead with the kind of open interest that we're looking at, and November is when that expiry also is, are we anticipating with the kind of price moves and the way the silver market especially was on a discount on MCX, premium perhaps in physical, all of that seems to be converging at this point in time. But how do you see the road ahead?
Margins are a function of volatility and risk management, and I feel that we've been rightly proactive in terms of increasing margins as and when the volatility increased. As we cannot predict the future, but if the markets remain volatile like this, I believe that the margins will be calibrated accordingly. So on that side, and in terms of volatility or volumes, it's very difficult to predict, because as an exchange, as I always say, we are a neutral platform. It's more of analysts who you should be talking to, who can tell you where the markets are headed.
All right, we take that point. Thanks a lot for that, and congratulations once again on the product launch. Thank you, Manisha, for taking us through that call. Just watch out for a couple of these dairy stocks. We were speaking about Hatsun Agro rising about 15% on the back of their numbers. Obviously, a lot of it is also aided by consolidation or acquisition of the Milk Mantra business. But watch out for Dodla Dairy and Parag Milk. On the back of gross margin expansion that we've seen year on year, both the other companies have also seen a spike. The street expects improvement in margins for these companies as well as we move into the second quarter results and thereafter as well. There was commentary on dairy milk procurement prices for Nestle as well, where they had said they expect milk procurement prices to come down, which is net margin positive for these guys. Take a short break, come back. We get chatting with the management of Supreme Petrochem to record their second quarter earnings. Stay with us.